Hey everybody, happy Sunday. We are live. I thought this was something I really wanted to do, but full disclosure, first time I've ever done live, so please be patient. But I thought it was important for me to tell you my story because I was told that if you took the mortgage forbearance that you could not refinance. And I was wrong. And I actually mentioned it in a video I made in November, beginning of November last year, 2020, that if you took the forbearance and you want to refi, think again, you can't do it. Well, I was very wrong, and I'm happy I was wrong. And I didn't even know until I met with a friend of mine who's a mortgage lender. And we were sitting on my deck at, I think it was around Thanksgiving. And I told him, God, look at these great interest rates. I wish I could take advantage of them, but I can't because I took the forbearance. And he basically looked at me and said, I think you're wrong, and I think I can help you. So I'm going to bring Larry on in a little bit, and then he can answer all our questions. But before I do that, let me just briefly tell you my story to see if it's something you can relate to. And this is very uncomfortable for me because I'm a very private person. But you know what? I closed my refi last month, and I'm saving $500 a month. And if I can help someone else save money, then it's worth it. So back to March of 2020, everything gets shut down, and I'm a realtor. I'm a full-time realtor. That's how I provide for my family. And we didn't know. We didn't know what was going to happen with real estate. You know, we had no idea if we were going to be able to sell houses, if anyone was going to do anything. It was new to all of us. So everyone started talking about taking a mortgage forbearance. So I thought, well, maybe I should do this. And so I tried calling Wells Fargo and couldn't get through because everybody's trying calling them. So I just went on the website, and literally it was 2 clicks and boom, I was in a mortgage forbearance for 3 months automatically, no questions asked. I was assured by every newscast, everyone I spoke to, it would not ding my credit. I'm very proud of my credit score. It's over 800 and I work really hard for that. And lo and behold, they were right. So I'm in the mortgage forbearance. It's now March, April, May. It's for 3 months. We're starting to figure out how to do real estate, you know, with everything opening up just a little bit, but I'm still not sure what the year is going to look like. So at 2.5 months into it, I did then call Wells Fargo and got them on the phone. I said, you know, what are my options? And she said, oh, we can extend it for another 3 months. No problem. And I was like, really? Is it really no problem? Like, it's not going to hurt me? And she was like, it's no problem. Automatic extension. Call us back if things change and let us know. So I said, okay. So I got it extended. So now I'm in 6 months total. So getting into month 4 and 5, we start figuring out real estate. I realize I'm good. I can start paying my mortgage again. But gosh, I really wish I could have taken advantage of these interest rates because all I'm seeing is all my clients getting these amazing interest rates and all my friends getting these amazing refi rates. And I asked lenders, and they said, no, you know, you could pay it all back and then you can refi, or you took the forbearance. And so I would do the math, and I wouldn't sleep at night, like, which is better, to have the 6 months mortgage payments or to pay it back and refi over 30 years. And it's really stressful when you're trying to do all that math and figure out what's the best thing to do. The other thing, when I called to get that other 3-month extension, is that she did tell me that my escrows, my property taxes, and my insurance do need to be paid regardless of what happens. And so I did. I paid those because I was so scared I was going to get this big balloon payment at the end of 6 months that I wasn't going to be able to pay. You know, in my job, you know, I live off commissions. You just never know. So I paid the escrows because I figured that was the safe thing to do. And then, like I said, I told you the rest of the story. I decided to start paying my mortgage again, but I was really bummed that I couldn't take advantage of refining with the low rates. And then it was around Thanksgiving, I think, and a friend of mine, Larry Etman, who's also a mortgage lender, comes over to sit on my deck and kind of talk about business. And we're talking, and I'm like, he's telling about these great interest rates that he has at the mortgage link. And I'm like, gosh, darn it, like, I wish I could have done that. And he's like, well, what's your interest rate? And I'm going to bring Larry on now, and I'll tell you the rest of the story, but I'll have him be a part of it in case you have any questions. So let me bring Larry on. Actually, I like this one better. How's that? Hey, can you hear me?
I can hear you fine. How you doing?
So this is Larry Etman with the Mortgage Link. Just say hi to everyone. I don't know if we have people on live or not, but they'll see it later if they're not. Oh, here's somebody.
How's everyone doing today?
Okay, so I was just telling them about the point of the story where you came over and we're sitting out on my deck and we're having some wine and shooting the shit about, business and what's happening. You're telling me these great interest rates you have. And you asked me what mine was, and I said, well, mine's 3.875. And you looked at me like I am a crazy person because I hadn't refied yet. And I told you, I was like, I wish I could do it. And you're like, well, why can't you? And so tell me what was going through your mind as I'm telling you my story and I'm whining and complaining because I took the forbearance, even though I'm paying my mortgage now, but I couldn't refi because I was told I wasn't allowed to.
Well, that's a common story. The bottom line is when you do go into a forbearance, well, first off, there's a couple things you need to do to make sure that, you do go into a forbearance, with the approval of your lender. If you're upfront with them, that certainly is the first criteria. But when when you do that, and you're letting them know that, they don't necessarily want to be forthcoming with you and say, hey, this is how you refinance quicker. Because if you tell them that, they're basically telling you how to leave their company, their lending and go to someone else. So they're not really looking to give that information up right away.
It's interesting. I'm just going to interject for 1 second. You say that because when I spoke to Wells Fargo, when I called them at that 2.5 months, I asked them straight out, can you just lower my interest rate, like streamline it or something, since I've been with you for 10 years? And she was like, no. And I was like, well, are you going to put the payments to the back? Like, what are you going to do? Like, how are you going to handle it? So they said most likely, but they'd have to see after the forbearance. So can you talk about that a little bit? Like, what do you need to do to be able to refi if you took the forbearance?
If you took the forbearance, you had to check the first box. Like I said, you had to be upfront with your lender, and they had to be fine with it going into it. You couldn't go into it, hide from them, they're calling you after you're 30 days late and then do it after you've missed some payments. You had to be upfront from the start. And then once you did that, and then you were officially in forbearance, the way out of forbearance, and then to be able to refinance, would be to make 3 consecutive payments to restart your payment history. Once you did that, then you're good to go again. And that's something that a lot of people don't know, especially the ones that have taken advantage of the CARES Act. They're not aware of that.
Yeah, well, I certainly wasn't, and I really am so appreciative that you were so nice about it. You were like, just let me take a look. Let's talk on Monday, and just you're going to send me some stuff. And I have to say, because as a realtor, when I'm working with buyers, their biggest, they whine and complain about the loan process because lenders ask for so much documentation. And I always warn them, like, yes, it's a pain, it's pain, it's pain. Just deal with it. And you were so great because, you asked me for a lot of stuff and I had to provide you a lot of documentation, but you never made me feel overwhelmed. And when I would, you were like, you're good. Let me help you. Like you helped me figure out certain ways to expedite the forms I needed. Remember, I needed something from the IRS. I don't remember now that showed proof of my income. I don't remember, but it's something that if you guys ordered it, it would take like weeks. But if I went on and ordered it, I got it automatically, and it saved us a lot of time.
2 weeks. Yeah.
Yeah. So that was, I think from beginning to end, and I'm the one that asked you to push it a little bit because I wanted to close in 2021, not 2020. But even with that, I think beginning to end, it was like 5 weeks. To refi. And now I'm saving $500 a month.
Oh, that's great. That's fantastic.
So we have a couple comments. So just a dude. Oh, that's cute. I want to purchase a home in Chevy Chase. The problem with that, all the good homes are taken. This is true. We are in a market here in Montgomery County in DC where it's so crazy. Every house is going way over asking, multiple offers, and you really have to fight to compete. Are you finding a lot with your purchase clients that everybody's competing on multiple offers?
Oh, absolutely. Yeah. Every house, there's multiple offers, and it seems like it's a race to closing.
Yeah. So what do you when you have a client, they're going to be in multiples, are there ways that you can like fully approve them so they don't necessarily have to have a loan contingency, or have you gotten some sort of tricks of the trade to help them be really competitive, even though they're getting a loan? Because if you're competing against cash, it's hard to
Right.
compete.
Well, it certainly helps to be pre-qualified, and to have that letter in hand when going in to make the offer. And that's
And what
something
is
that
your basic turnaround time, both for like appraisals, like what's the shortest we could write an offer to get the appraisal back, and also like from contract to close? Like what are your time
all right.
frame?
Well, I don't want to get myself in trouble here, but we
I know, and
do
every
have,
situation is different. I get that, but
yes, but we could turn something around in 15 days from soup to nuts if need be.
wow.
Yeah, it's not something we do. It's not something we do regularly, but yes, we can do it, and we have done it. So that's
That's
something that if you have to close fast, we have everything under one roof. We process and run and underwrite under the same roof. We're the lender. It all happens. You walk in the door of the building, it all happens in there. So
that's really important to know, because I'm finding with my clients, when we're competing, like I said, if you're competing against cash, it's hard to compete with that just for obvious reasons.
mhm,
But when we're competing, it really comes down to, besides the price, but the timelines. Like what does the seller want? If the seller's already moved out, they want to close quickly. Do you know what I'm saying? So
sure.
that's something that can make our contracts offers stronger without costing them money, as long as the lender can do it. It always comes back to the lender. So
Yes.
that's
Oh yeah.
really that's really good to know. And also, I just want to be clear, because I don't want to get off the forbearance topic just yet, that if you are currently in forbearance, it's my understanding you cannot sell your house. Is that correct?
No, you cannot. You have to exit forbearance in order to do so.
Do you know if you have to? Is it the same thing as the refi? Do you have to exit and pay 3 months, or is it
Yeah.
different for every situation? Or I'm not
Once
sure.
once you've made those 3 payments, then you're officially out of forbearance. Those payments have been reallocated to the back end, and so instead of your term ending in April of whatever, it's now 3 months later. But yes, as long as you make those payments, then you can sell your house then.
Have you heard of it like not being pushed to the end of the loan? Like, are there situations where after the 6 months, somebody would have to pay it all at once, like a balloon payment? Because I've heard of that. I don't know if it's happening in our area, but I definitely heard of, not every situation is they just tack the payments to the end of the loan.
I've heard. I have not witnessed anything but them tacking it on to the end. But that's not to say that each bank can be different, and they might actually give an opportunity to pay it earlier. But in the cases that I dealt with, that was not an option.
Mm-hmm. Yeah,
You
you
you had
definitely,
to make.
obviously, everybody's situation is different, and you got to check with your lender to see what your options are. I'm just telling you my story, because I was, like I said, I was wrong. And if it wasn't for Larry, then I would still have 3.875 and really not know the difference.
Mhm.
So I'm incredibly grateful to you about that. And when we did meet and I told you my interest rate, it was 3.875. Now, mind you, I think it was around Thanksgiving, so things may be different now, but you said to me, if your interest rate's over 3, you should refinance. Like, it was pretty cut and dry. Are you still at that over 3 number, or is,
Yeah.
what
Oh,
has
yes.
not changed?
Yeah, I would say that's yes. If you've got a lot of equity in your home and you're over 3, you absolutely should still be refinancing.
Mm-hmm.
Higher balances, still worth a look. You still might save yourself a good chunk of change.
Right. Yeah. I mean, there are closing costs involved, but they get wrapped into the loan. So it's not like you're coming and paying
Right.
with a check, but it still does cost, it costs money. So you got to just, when you
Well,
get that breakdown, I know what it is. Although I have to say, when I refinanced with you, for some reason, I got a check. It was very strange.
well, it wasn't that big of a check. I would
I
think,
was happy. I was happy with that. I was like, you want to give me money? Okay.
Caryn, right now you're basically, you can purchase money, in a home, for a home or refinance at, these are historic lows. So it makes sense to roll them in right now. Before, when if it was at 6%, that's something different. But now, at the rates that they're at now, it's better to walk away with a check. Certainly.
Yeah. I was surprised. I didn't expect that. It was very cool. Another thing that I'm seeing that my clients are doing in order to compete in this crazy market is they're taking out a home equity line of credit, which we call HELOC, on their present house, so they have money to draw from so they can put a bigger down deposit on the new house, or they can pay for the new house without having to sell their house. Do you do that? Do you do HELOCs on current homes?
Absolutely. Yeah, absolutely.
Because that's huge. That's huge, people. Not many lenders do, and it's definitely a way to either refinance and take money out, or to put a HELOC, a home equity line of credit, on your current house. You can just draw money from, and then when you sell your house, you pay the most back, both the HELOC and your mortgage.
Yeah, I'm not sure if you're aware of this, Caryn, but you can also, if you have a HELOC, a lot of people, they say, oh, I have a HELOC and I have a balance that I can't pay back right now, so I can't refinance. That's not the case either. You can actually refinance and leave that HELOC in place and just simply, avoid it. I mean, it's called subordinate, but, so there are a lot of people that, again, they feel that they can't do it because
hang on. I just want to be clear. So you have a first mortgage and you have a home equity line of credit on your house, right?
Yes.
And you could just refinance the first mortgage and leave the home equity line alone? You don't have to refinance them both?
Nope, you don't have to.
Interesting.
Yeah. And the second lender doesn't object, because you're helping them. You're making a stronger case for the homeowner to be able to pay their bills, because you've lowered their payment, like for instance in your case, $500. So now they have a better chance of paying that HELOC off. So everyone's happy. So you can leave that alone, and I've got that HELOC, I want to leave it, or you can roll it in, or you can take money out to pay it down. You can do all kinds of things with it. Yeah,
I mean, I'm telling you, it's been the best thing. And people, you have to understand that these things take time. So when I say get a HELOC so you can buy the next house, you're gonna have to build in 6 weeks for that, wouldn't you say, for the refi, for it to close and then draw off of it. So if you're thinking about buying in this market in the next couple months, and you don't have the 20%, which you really want, or even the 5% or 10%, I don't know, you probably have a lot of programs that you can discuss. Sure. To me, it's a no-brainer, because it costs you closing costs, but besides that, like if you never use it, there's no penalty, right?
Oh, no, right. And you recoup I forgot how many months it took you, but it will take you to recoup your costs, but it's not a lot of time. It might, at $500 savings, I would say by the 7th month, you've already recouped your savings. I'm sorry, your closing costs. And now it's just pure savings from here on out.
Yeah, I remember actually you were really great about doing the numbers with me, because I wanted to know if I sold my house in 7 years, what would it be worth it for me to do this 30 years or 15 years, trying to figure out the right program for me. You're really great about running the different scenarios with me to see which would make the most sense for me, because obviously I think, I'm not a lender, but when you get a new loan, you're paying most of its interest at first, correct?
Sure. Yes.
And then as the loan gets further into the 30 years, you get more and more principal.
Exactly.
Yes. And so when you and I were going over the different scenarios, 30-year versus 13-year, versus 15-year, the 15-year loan, my monthly payments were going to be more than I was paying at my 3.875. So I chose to go with the 30-year, which is $500 less a month, because you were like, you can always put money towards the principal. There's nobody's stopping me from adding that extra $400 a month and allocating it just to the principal, correct?
Yeah, correct. Absolutely. Yeah. No, that should be, there are some people who do that on a regular basis. They set that up that way.
But why is that? Because, what difference does it make in the end?
Well, then if they, eventually that'll lower their interest that they're paying, pay their principal off quicker.
Is that so when they sell, they just give more money in the end, almost like putting it in the bank? What is the benefit from paying off more principal rather than just going with the flow?
Because you're then financing less money moving forward. So, right now the amortization schedule, of let's say like your loan has you paying, principal up front, a certain amount towards principal, and then moving towards interest eventually. It kind of shifts over.
Right.
So this is something that so by paying the principal, that brings down the amount of the loan of
Right.
what you have to pay, and then you're going to save interest.
Right.
So eventually, if you pay enough, just think about it that, you'll end up paying off if you do it 30 times. Let's say your interest payment, your mortgage payment is $3,000 and you pay an extra $100 30 times. Well, you saved at least a payment at the end.
Right. Yeah.
And more because of interest.
Mm-hmm. What are the current interest rates approximately? I know it's different for everybody, but if you had to, let's just give us some numbers.
All right, I'll give you some basic statistics.
Okay.
Okay. This is Friday's market, how things closed, and this is basing on a 30-year conventional mortgage. We call it a credit score between 7 and 720, and for an average of about a $400,000 loan. A 30-year is at 3.178, a 15-year at 2.33.
Wow. 2.3,
Mm-hmm.
That's really low.
Well, it's low, but last week I would have told you it was a little lower.
Yeah, so I know rates ticked up a little bit last week. Are you I know you don't have a crystal ball, none of us do, but do you see them staying around where they are, around the threes, or do you think? What are your people kind of talking about at the water cooler? What's going to happen?
Well, the water cooler talk is that as more and more government plans are revealed and put into place, and if the economy stabilizes, rates will go up. We see them we see that 3.1 number at 3.5 mid-year.
Oh, wow. Okay. That makes a difference,
Oh, a huge difference.
Yeah. So if people want to buy, they should kind of get it going on,
Now's the time.
Let me ask you something. If once you lock in your rate with you, how long does that lock last?
Well, you can actually choose that, and it's actually part of the rate process. If you are, some lenders are overwhelmed, and these nationwide lenders, they're doing so many refinances, they can't close it soon enough, so they have to lock for 90 days, and so that means that your rate is actually going to probably climb up a little because you got to pay for a longer lock. So we try to lock. We like to do 30-day locks, but a 45-day lock is more realistic right now. If it's a purchase and we have that deadline, and if it's under 30 days, we'll lock for 30 days.
Yeah. I remember when you quoted me my rate and you're like, oh, you're locked in. I was like, okay, now I can't. Because once you're locked, you're good, right? You can't, even if the rates go up, you're good to go.
You're good. Once you're locked, you're good. Mm-hmm.
Yeah.
You're where it's going to be.
I just think that, like I said, I was given wrong information. I don't know if I was given wrong information or if the information changed. That's the thing. When people first started taking the forbearance, was it true that you couldn't refinance? And then as it got longer, the CARES Act made it possible? Maybe I wasn't, maybe I was just given the information at the time, or either that.
There was a lot of misinformation out there. There was also a lot of unknowns, because when things were happening, the government knew they needed to do something. People were saying something's going to be done. People were calling their lenders and saying, hey, they're talking about it, so people were just writing notes down and saying, okay, this person called in, and so I think until things actually rounded into form, there were just too many unknowns. People had bad information. Yeah,
I'm actually worried that people are still, because then the forbearance didn't all got extended again, isn't it? And foreclosures, everything seemed to get extended again. So we have a false sense of security that what's going to happen when people have to start paying their mortgages, or when the people that are furloughed, don't get their full-time employment back. I'm a little bit nervous about this. I don't know if you feel it at all, but I feel that there's so many people that are still on forbearance.
Yes, there are a lot of people getting assistance, and that at some point in time, that's going to have to change.
I know. I mean, do you think that we'll get like the bailout? I know that there's a lot of controversy about Biden's plan. I mean, and this is probably a whole other topic, but I do. It makes me nervous that, so many people took advantage of the forbearance, which is great because people like me, I didn't know. I didn't know if I was, going to
Right.
be employed, selling houses when everything shuts down.
Right. No,
I then just started to pay it back, pay my mortgage again because it turned out that I could do my job. But a lot of people, are not in the same position and they're still on forbearance and they've just extended it. And it just, I get very nervous what's going to happen when that stops.
well, I think you have good right to be nervous.
I don't like to ever have to sell anyway. I mean, the good news is the prices are going up. So people have equity in their houses and they're just getting more equity as values go up.
Right.
So at least if they have to sell, hopefully they'll make some money. But I don't ever like to sell somebody's house because they have to sell. I like to sell their house because they want to. It gives me no joy to have to sell someone's house if they don't want to do it. You know what I'm saying? And
sure. It's a difficult situation.
Yeah, idea. So anyway, I really I appreciate you coming on. I'm going to keep the video. It'll stay in my YouTube library, I think. Once again, I said I haven't done this before, hopefully. And I have your information in the description if you want to put it. Can you do comments or is that just me? Can you write comments?
I don't know.
I put it in the description on the video, so I think it's
I can't comment. No.
It's just me. But it's in the description on the YouTube video. So it's all there. And you all can reach out to me and I'll give you Larry's information. Once again, like I said, I didn't know until we started chatting out on my deck. And, 6 weeks later, I closed my refi. And for the next 30 years, I'm paying $500 less a month because of our conversations. So I thank you for that. And if anybody's watching this, you have to check with your lender to see what your options are. I think the one nugget that you said, Larry, that to me I really heard was call your lender and find out your options.
Absolutely.
We have one more question. What advice do you have for buyers in today's market? Sellers have it easy, but what do buyers need to know? Ooh, that's a big question. I think the best advice that I would give buyers in today's market is basically what we were just talking about. You have to have all your ducks in a row. You have to have your financing, if you're getting a loan, ready to rock and roll so you can be competitive with the other buyers. You have to have professionals that have your back and can tell you what you need to do to write an offer that's going to be competitive if there's 5, 10 offers on a house. It's not an easy market for buyers, but if you have all your ducks in a row and you're tenacious and you're ready to get into this market, you can get a great interest rate and have a great loan for the next 30 years, even if the price was more than it was 6 months ago. So that would be my best advice. Just get all your ducks in a row. If you have any questions, anybody, for me or for Larry, please reach out. If you're ready to refi, you think maybe you should refi or purchase, reach out to Larry. He will be very kind and very calm and walk you through it. And I'm hopeful that this story, if somebody heard it or if somebody heard it from someone else, can help somebody because there's nothing I like better than to help people. So that's all I got. You got anything else you want to say, Larry?
Well, I want to add, you were saying how people should, how buyers should, as far as advice goes. First of all, they need a great realtor like you. That's a big thing now. And also just, thank you very much for having me on. It's been a lot of fun. It's been a lot of fun working with you. I look forward to more chances like this in the future.
Yeah, we'll do it again. All right, everybody, have a great rest of your Sunday. See you later. Bye.